All right, so this is going to be a little bit of a stock talk, quick little update on my perspective going forward, and what I envision we get right. So we had the Monday gap up, which is a little bit of a not a complication when it comes to this structure overall, right? We do have the band of charm flows reappearing. It's more or less how does this behave after that gap up, right? So like I said, we had the distribution being established. We have the exhaustion, the kind of lower high within this gap, the breakdown, the floor being established, breaking down through that floor, and then the climax being put in on Friday into our Vanna Charm flows with a notable footprint and whatnot, right? But when we get this gap up, right, it's kind of a difficult range to play because you don't, in my opinion, necessarily want to take a long side position over the weekend right here on massive size. I'm looking at Qs here because it's a little bit of a better structure. I like it more for the long and the short, right? Because we're kind of finding a higher low within that gap, whereas SPY is a little bit, um, not as deep within the discounted range. But when you get this gap up, you can't necessarily chase it. You kind of have to play at hand. What is at hand here, right? So if we got the pop, the gap fill, and then you could short it down to the in walk, right? But now what we're kind of seeing is the pop, the inside bar, the failure, kind of like a new week opening progression gap from the 27th. And a higher low is more than likely going to be found here within this discounted range. And that's kind of where you can play this off of. You can kind of play this off of the 610 spot, trade this back up to most likely 631 on like some December expiration. Obviously, taking some exposure off on at 625. If you want to kind of play it a little bit more passively, you can trade it up to 621. It depends on your expiration, but in my opinion, we're most likely going to find a higher low here, right, within this gap, than this in walk, and we're going to see the full reversion to the November 4th gap. Now, after that, we have to see kind of how it plays out. I could see this taking out these lows. I could see this pushing new highs. It's very speculative at the current moment in time. Paying close attention to SPY as well in terms of how the structure develops. Like I said, we are within the window of vulnerability for the long-sided trade, so I'm going to be more keen to position myself within that range than I would be to get short. But after November 21st, we have to see what happens, right? We have to see how a lot of names look. Ford looks very good. I don't really see like a lucrative options position at the current moment in time. It's most likely just a commons trade for me back up to that $15 range, where obviously we had multiple opportunities to trade it throughout this entire kind of structure that I've discussed. I like UNH. We're finding a structurally sound kind of bid within the gap from the September 9th session, but nothing in terms of adding into a position quite yet unless we kind of break down beneath that 300 level. Snap looks really nice. We find our reclaim of the COVID lows off of the report. Um, and the breakdown, we find a higher low. We get the pop. That's actually a really nice options trade if you want to take it on Friday. A little bit of a speculative position. But when you kind of understand first of all, the higher low that we found within like golden pocket range off of the report is one thing. The COVID lows are very pivotal. Just the behavior off of that 789 spot is important as well. And we see the pop back up to what's most likely going to be a fill of the August earnings gap. Like I said, this is a commons trade as well. This is something that I do like on a higher time frame perspective, but I want to see how 930 to 10 acts first. You can't really get too speculative and aggressive on these beaten down names, but I will say the massive influx of volume and the subsequent structure that followed that is very appealing for a long side position. And then taking your stabs at the options exposure is very crucial as well in terms of when and how. But I do like this options trade following the earnings report. You most likely, I think you will have met your IV flood, or met your implied move, but then these contracts most likely get crushed a little bit off of that kind of capitulation following the report. All we're doing is finding a higher low following a 20% pop in the overnight session, right? So I like this. To 930 to 10, the commons trade is still very vulnerable as well, but you have to be kind of selective in terms of understanding the time frame on your positioning, right? Like, do you want to exist in investment long term? You're going to trade to 20, right? Well, if it is, then you're going to have a different kind of risk to reward and whatnot than if I'm just trading this off of the report and off of these higher lows within the influx of volume to 930, right? So always, it's something I like to preface, always understand your time frame, right? Nike getting a nice little 7% leg, I think, 10% leg off of um, last week's low. Nothing super considerably like clean yet in terms of a structure, right? It's a little bit shallow or deeper than discount, but the reclaim of the COVID lows will be pretty appealing for me. I really do like this chart on commons up to 80 to 90 to 100 and stalking it for an options exposure very notably soon. Energy has had a pretty nice week. I have a little bit of like concern with how I would handle the energy position. I still like Meta, specifically METU, the leveraged 2x ETF up to the 670 to 700 spot. This is kind of a higher time frame distribution, like I've discussed, right? Like, we have our initial climax, our reaction, our UT being put in, right? And we get like our UTAD and test within this range, last point of supply, a breakdown off of the report, and we can potentially get another secondary last point of supply. Just kind of how this is being handled in terms of like the preliminary signs of exhaustion, kind of almost showing in 2024 and a lack of like an accumulative structure and more or less just the higher highs being sold off with an aggressive leg falling in April, following the April the breakdown in Q1 to Q2 of 2025, the subsequent stall within these highs, and then we get a beat down off of this report. This is really just playing the reversion within a window at the end of the year where the flows are very meaningful. Like that's kind of all it is. It's not really like a really aggressive long side position to $800, right? This is already rallied from $80 to 800, essentially 797. Um, Not an aggressive position in that front. It's more or less just a reversion off of where we're going to find a higher low in a pivotal spot with an influx of volume, and then seeing the subsequent exhaustion from a specific side and where that draw is going to be in terms of supply and demand. Right? It's not a really aggressive long that I'm taking. I do think that this reverts sub 400 within the next year or so. Just how this chart has moved overall and the subsequent structure that we get, right, with the potential preliminary supplies developing, and kind of like our climax being put in and whatnot, right? So Meta is a good long still. LLY absolutely ripping. There's an options trade off of the report into the 898 spot. Otherwise, this is just a commons trade, right? I've got this labeled, right? We had our floor established, that low being taken out in April, a nice rally, and then we attempt a higher low. We see the stall within the breakdown that we had in May, undercut those lows in August off of the report with an highest volume we've seen in 6 years, and then find a higher low, reclaiming this kind of preliminary supply or support, and then we get the leg and the last point of support, and we didn't really find a secondary last point of support, minus like a 1 day kind of higher low candle. So that is what it is. Sometimes you don't find anything to really long again aggressively on options, but this absolutely ripped new highs, and this is a phenomenal long in my opinion. A lot of healthcare names look pretty good, if I will say so myself. UNH is kind of lagging, but I'm not surprised. It made a 60% run up from the July to August lows, I think, if I'm not mistaken, and filled the gap from May 13th, right? Um, MRK, this is just like a beaten down sector from April, right? It underperformed in comparison to a lot of, risk on higher beta names. We find a higher low, we get the rally, we get the subsequent consolidation. You just have to pick and choose which vehicles you want to have exposure on, and LLY and UNH are really the best. MRK looked really nice. I mean, this is another like really beaten down name, with a lot of climaxes being put in. And we found like a higher low following the September pop. But I have my favorite names. It's a slow moving sector, right? I mean, we find a higher low, stall, get the breakdown, and take out those lows off the report. That's pretty important. Pfizer as well is seeing a nice pop and influx of volume, another beaten down name underneath the COVID lows. Finding like a really notable influx of volume. I think it was the highest volume at, is it? One of the highest volumes ever. Um, but like in terms of healthcare names, I'm pretty selective with what I would want exposure on. It's not like a sector I'm really slamming the table. LLY and UNH are kind of my preferred vehicles, if I'm being completely honest, right? But definitely like keeping an eye out. It's just a broader sector rotation, lagging in comparison to a lot of other S&P 500 holdings, whatever you want to call it, right? Path, we've, established an accumulation. We've found our test off of the previous kind of low established that was taken out in August of 2024 off of that breakdown market wide and a failure within this massive bear gap from the May report of 2024. Take those lows out in April, actually March and then April, right? And then we find our test, and now we're finding our last point of support within the discounted higher low in the new week opening gap from a 32% week in early October. This is a commons trade, right? I don't like this for options quite yet. There's a gap here that needs to be filled from the fourth. We need a really clean structure for me to get that exposure. Because right now, if you just take this higher low, let's say you get a $14 average, you're still break a structure, still a 33% return. And I think this can push honestly up to $20 within the coming months, right? If I'm being completely honest. So that would kind of be my target, $21 for Path Commons, right? And this is a really big focus of mine. You can cover and then you can roll again, looking for push to 28, right? I like UPS still, right? We had the inside week last week. We had the kind of capitulation day on Monday, where that exhaustion is very prevalent from a seller's perspective. Didn't really get the $90 reclaim, but this is just a nice little commons position that I would take, kind of risking 90, like you can take a position like 90, 91, and kind of risk the earnings gap being lost, for a push to 100 to 109. Like I said, it's just coming off a big time spot, COVID lows, massive volume, notable exhaustion, like a floor to kind of play it off of that was established, undercut, and then a nice amount of targets for a shorter term shares trade, right? Nothing options wise, and obviously, you can look at the accumulative behavior within this name, but I'm not one to sit here and say that I'm a big time buyer of UPS on a long term position for this. Like, it's just not my favorite watch, but it's definitely there if you want to. But this is just a shorter term commons trade for me, right? So that's all the longs I like. PA&W is still a higher time frame distribution that's been established for a while now, in my opinion, since February. I think this pushes $100. Next year, right? This is kind of our like climax reaction, right? We develop like a UT, a sign of weakness potentially being put in here. This could be our UTAD. Only time will tell. It's all speculative. Snow doesn't look the best. I still think Intel could have a little bit of room, but this was just a really clean $25 to $40 commons trade with an options play off of 29. Lulu hasn't shown anything that's really appealing to me yet. Neither has CRM. These are all speculative commons positioning. This is a really nice high low on Monday on ZOM, right, where we just reclaim the progression gap after a really nice Friday pop, and push to the April 3rd gap fill. But I don't know. The thing with energy is like Oxy. Like, we're finding a notable buyer within the higher low range in the earnings gap from like May. But in the context of how this weekly chart looks, I would just love for this to take out the April lows. That would be so ideal for this name, in my opinion. I would love for that to happen. I would love for this to kind of consolidate still. We are kind of finding some exhaustion from sellers and a lot of anomalies being put in terms of wickage and volume. But I would love for a higher low to be put in on this name underneath, or a lower low to be put in on this name underneath this April sequence, right? But it's up for interpretation. It's up for grabs. We'll have to see, right? Like, the energy sector as a whole doesn't look bad at all, but it's just not something that I'm very aggressive with at the current moment in time, right? Just because I don't know how to explain it. It doesn't really pique my it piques my interest a lot. It's a very notably beaten down sector that I think is going to see a lot of money rotate into it, and has been seeing a lot of money rotate into it. But I don't know if I've seen a structure to get aggressive yet. I've seen a structure to build up positions, for sure. I don't know if I've seen a structure that necessarily calls for aggressive exposure in energy at the current moment in time for like what I'd want. Disney just had its earnings report. I'm not surprised that we're seeing a little bit of a breakdown, especially with the run up prior. I would love this to trade to the $100 range and find what is most likely going to end up being our last point of support on a very notable long term accumulation, right? Where it's beaten down. We see the preliminary signs in early to mid 2022 and 2023. The COVID low sweep sparks a reversal. We find a higher low last year, see the stall, see those lows taken out in April, and then kind of see a really clean rally and a lot of consolidation. And then, now we're kind of reverting into this range where it's up for grabs if we can see a nice leg stem from this, right? Is kind of what I'm getting at, right? Lyft has had a really nice pop following the earnings report. Comments are cool on this. It's not like my top watch. It was really clean in August, off that $13 higher low for a nice like 70% return into the $21.52 spot, which is our May 2022 gap that we haven't touched since 2022 quarter three. This was a nice comments trade if you want to take it. Not anything that I'm super like aggressive on, right? My main watches, Meta, Path, Snap, Ford, Nike, UNH should have a nice pop soon, in my opinion. I just would love it under 300. And then the shorts are just not necessarily there quite yet, right? I'm not shorting this, right? Like, this is a really notable higher low bid found off of a pivotal point within this name on the July highs with an earnings report next week, right? I think that, I've said this a lot, just the timing aspect is very important on why I don't think we're going to see a lot of vulnerability short side minus the little windows of weakness that we have in terms of within this window. And I have my selective longs. Just how it works, right? Bitcoin's been, there's a lot of fear in Bitcoin right now, if I'm not mistaken. Yeah, I mean, that's just kind of how I envision these things occurring, right? And it's how I've envisioned them for a while. And my perspective doesn't really change much for the time being, right? So, damn, it's got split. Makes sense. Something's cooking. I will say that. So that's pretty much it. Just a quick little chat.